What is up, you guys? It's your favorite cutie, Mel, back again on my Soapbox channel to give you guys yet another video. And today is a brand new day, and we're talking about the Forex market. Now, if you're new to the Forex community, hello, I am too as well. So basically what I'm doing right now is regurgitating the information that I have via a paid course. They encourage us to share the information to help us retain it better and to teach someone else. So this is what I'm doing via my YouTube channel. So lucky you get to get what I paid for free. Now, if this is the first video that you're finding, I suggest that you go back to the very first video because I'm basically going to be working my way up all the way to as far as I take this course. Today, we're going to be talking about market participants, what they are, who they are, brokers versus trading platforms, what they are, etc. And we're going to also talk about trading sessions, when the best time is to trade, and when the best time is to buy and sell, and basically learning how you actually even make profits in the Forex market. So without further ado, we're going to hop into the very first topic, which is market participants. Let me actually just see if I can move this just a little bit. So if I need to put something over here, I will do that, okay? So what are market participants? Basically, this is just a term to talk about the people who are actually trading in the Forex market. Very simple, very much straightforward, but we're going to be talking about the different kinds of participants right now, starting with number one, which is the largest part of the Forex market, which is commercial banks. The first market participants are commercial banks, also known as the market makers. Okay, these banks also deal with central banks, which leads us to number two. The second type of market participant are the central banks. Central banks hold a large currency reserve of their domestic currency, as well as their trading partners. Central banks control many economic factors, such as monetary policies and interest rates. Okay, so that's just like, I'm not sure if they have Chase in other countries, but here in the United States, I personally bank with Chase Bank. So they would be, I'm assuming, a central bank because they hold large reserves of currency, of the US dollar, etc. All right, number three is the MNCs, the multinational corporations. So these are people like Coca-Cola or Samsung. You know, someone is a multinational corporation if basically it's a huge corporation that is not only in one country but multiple. So I think of McDonald's. McDonald's is not only in the United States, it's a major corporation and it's international. So that would be multinational. Same thing for Coca-Cola and Samsung. Those were the examples that they gave, okay? Fourth are the fund managers. So these are people who run hedge funds and Forex brokers and things like that, okay? Forex brokers and hedge funds. And then fifth, which includes you and I, if you participate in the Forex market, would be the retail traders. So retail traders are individuals and small businesses who trade their own money in the Forex market, okay? So I hope that you learned something new. If you did so far, go ahead and give me a thumbs up. And that will encourage me to keep uploading and sharing this information with you guys for free. Okay. So next, we're going to get into the broker versus the trading platforms. There is a difference between a broker and a trading platform, and we're going to hop right into it right now. By the way, if you guys have any more information about the things that I'm talking about, feel free to drop down in the comments below and share so we can make this a community where we can all get value, including myself, because I would love to learn as much as possible as I am sharing. Okay, so all right, let's hop into it. What is a broker? Brokers are firms that provide access to a platform that allows individuals to buy and sell currencies. So basically they are the middleman between you and the market. So if I had to make a diagram, you will be right here, the brokers will be right here as the middleman, and then the market will be at the bottom. You can't get to the market without a broker, basically is what they're saying. When you fund your broker, you can use those funds to trade in the markets. Any gains or losses will be reflected in this account. You can also withdraw those funds back into your account, all right? Pretty straightforward, pretty simple concept. A broker is basically just the middleman between you and the market. Now, what is a trading platform? A trading platform is a software service that allows you to interact with the financial markets. So, we're talking about the Forex market right now, but a good example of a trading platform, if you know anything about stocks or the stock market, would be like Robinhood, Webull. These are trading platforms. It's a software that allows you to interact with the market. Just as simple as that, okay? It says the trading platform is completely separate from your broker. Okay, so basically these trading platforms work with a certain broker that allows you to use the trading platform and interact with the market. If that makes sense. If that makes sense, go ahead and give me a huge thumbs up, okay? Popular trading platforms for Forex are the MetaTrader 4 and TradingView. All right, you guys. So now let's hop into when to trade Forex. This is very important because I feel like just intuitively, because I'm a beginner, it just seems that anything having to do with buying, selling, in a market in general, timing is pretty much everything. All right. So we're going to talk about the different sessions that you have within the market so you can know and kind of explore and check these things out before you kind of hop in and get in where you fit in. All right. So there are 4 major trading sessions every single day that the market is open. In the course that I have, they said that 2 sessions are best to kind of spot potential setups and 2 sessions which are really good to trade in. All right. Basically, you will determine this for yourself when you create your own trading routine. So once you really get good at this and you know what you're doing, you will naturally develop a routine in which you hop onto the markets, maybe check out, scope out the movements that are going on and kind of try to predict what trades you're going to make. All right. So let's talk about the first session, which is the Sydney session. This marks the official start of the trading day, and it is the smallest and calmest session to trade. So the currencies that will make their initial moves at this time are the AUD and the NZD. Okay. So this is important to know. They say that this is one of the best sessions to start if you're a beginner because it's the slowest, it's the calmest, which it just obviously, if that's the truth, then it just makes sense why that would be a good place for beginners to start and kind of just get their footing. All right. Let's go to the second session. So the second session of the day would be the Tokyo session. The Tokyo session is the 3rd largest trading center in the entire world. This is where the JPY yen will begin to make their initial moves within the Tokyo session. So both of these are ideal for new traders because of the low liquidity and the trading volume. And like I said, just to repeat and to reiterate, both the Sydney and the Tokyo session are great places for new traders like me and yourself probably to get started in the Forex market because of the low liquidity and the low trading volume. All right. So let's hop in with the big boys. We're going to talk about the 3rd and the 4th session right after you hit that like button. Okay? Okay, not for real though. All right, let's get into the London session. So the London session is the 3rd one, and its volume and liquidity is at an all-time high. So 34% of all transactions happen in this 3rd session. All right. And now let's talk about the 4th session, which is the New York trading session, marking the end of the trading day. Okay, so the Sydney was the beginning of the trading day, and then the New York trading session is the last trading session of the day. And basically after the New York session, it will go back up to the top and start with the Sydney session. All right. But anyways, the New York trading session is the 2nd largest session in the world. 85% of all trades involve the USD dollar. Okay, so that says a lot. That's says a whole lot. So basically, once you get really good, let's refer back to the first video to try to kind of tie all this together in our minds. So basically 85% of trades pretty much are major trading pairs. So that's something to keep in mind as you kind of get your footing and you learn what you're doing. If you want to make some money. All right. So during the 4th session, basically, I guess this is where a lot of USD and CAD, which is Canadian money, is traded. They're the most traded pairs in this session. Awesome. So let me know if you guys are learning new things down below. Please get down in those comments, interact, share these videos with someone that you want to learn with, or if you even want to just decide if you want to take your own course, this is a good kind of like, how do I say it? I don't know. It's like a nice slow introduction. All right. So let's hop into the best times to trade. The best times to trade would be in session overlaps. They say the best ones to trade in are the Tokyo into the London and the London into the New York session. So that would be the second into the third and the third going into the fourth session. Forex time zone converter. So basically, if you Google a Forex time zone converter, it will tell you which sessions are open and overlapping in your specific time zone. Because right now I'm talking about, I live in the United States, so I might have a different time zone than someone who lives in New Zealand or whatever, you know. So if you're looking for an easy way to find out which sessions are what times, go ahead and Google a Forex time zone converter. All right. Now, we're going to talk about the last thing and what I feel like is probably the most important thing since we got started in this course, which is buying versus selling and how to make money buying and selling. So they say it's important as a trader to know the difference between a buy and a sell because you can make money both buying and selling. So you can make money both buying something as it's going up and also selling something as it goes down. So they said, think of retail. When prices are low, buy when the prices are low and to sell when the prices are high. You know. We've all heard that before. When the market is low, we should look to put in buy orders. And as the market and exchange rates go up, profits are made. So basically, if this is something right here, and this is a low in the market, we will buy. And as it goes up, we'll be making money. And also in the reverse, so if you're at a good point in the market and you're up here and you predict that the market is coming down, you can also make money that way. All right. So I'm going to just read also the definition that I put for the selling. So when you sell while the market is high, as the value comes down, you also are able to make money and profits. All right. So let's get into some terminology that you might hear when people are referring to the market going up or down. So another word for the market going up is the term long. The market going long means that it is trending upwards, okay? So if you ever hear that, you know that if people say the market is going long, that might be a good time, or they predict that it's going to go long, that might be a good time to buy while it's low and watch your money grow as it trends upwards. Also, the term short, which would be the opposite. Short, which would be the opposite. So short means get ready to sell, expect the market to come down. So basically, if they say the market is going short or the market is about to short, that's probably a good indication that you want to sell so that you can make money on the downturn. So at first I was thinking, okay, so if this is true, if you can make money when it's going up and when it's going down, so how would you lose money? Basically, you lose money if you predict wrong. You want to be on the right side of the market. So this is what I wrote down in my notes. The whole point is to try to be on the right side of your predictions. So if you place a buy order expecting the market to trend up and it actually goes down, then that's when you would lose money and vice versa. Okay, so I hope that this helps. I hope that you guys learned something new today. If you did, please do not forget to give me a thumbs up on this video and also subscribe to this channel so you can get more videos like this. I'm going to do my best to try to upload at least once every other day, every 2 days, okay? So even when I'm not uploading, I'm still taking notes and I'm still getting prepared to share the information that I'm learning. I'm not skipping anything. So even if I go a day or two and I'm just learning on my own, trust and believe I will pick up where we left off and give you guys more information for free. So thank you so much for tuning into this video. I hope that you subscribe and become a reoccurring cutie. If not, hopefully you'll tune back in and decide to subscribe then. Either way, thanks so much for tuning in. Stay posh and stay cute. Bye.